Now, good times don't last forever, not in life or in the stock market. And when it ends, I want you to be prepared. Hello there, welcome to another video on investing in stocks. Today we're talking about a little bit of a scary topic, is what to do or what to think when the stock market crashes or goes down. Now, a lot of young investors, including myself, started investing after the crash in 08-09, and we haven't really experienced a crash or a big correction. I've experienced some minor dips, but nothing too serious. But they are part of the game, and the stock market is a roller coaster, and if you want to join the highs, you got to stay through the lows. So a couple of things to keep in mind. This is very important for everyone, and I want you to just relax and stay calm. So first of all, usually say what goes up comes down in world and in physics, and in the stock market you can actually say that what goes down comes up. It has never stayed down, so the stock market will always recover, don't you worry. Second one is, if you have invested money in the stock market, there's a good chance you're pretty well off and you're not struggling for cash. So the glass is definitely half full, right? I invested back in 2013 and I made so much, my stock has gone up more than they will ever go down. So no matter how hard the stock market crashes, I will still be in the green. And that's the case for most people. If you've been invested in the stock market for 2 years and the market has gone up like 30%, you're probably never going to lose money on the stock market, okay? It might, not just might be, but it is a great buying opportunity. So have your watch lists ready. Keep track of your portfolio, and if the stock market is bleeding out, gone down 10, 15, 20%, that might happen sometime soon maybe, or in the cryptocurrency world, be ready to pick up your favorite stock on sale basically. Because, you know, you can buy the same amounts of share for way less money than you could before the crash. No losses before you sell. Someone called bullshit on this, but I'm going to explain it very simply. A loss of money is permanent. So if you lose money, you're never getting it back. In the stock market, you don't lose money, your investments lose value, but you have the same investment. So you own the same amounts of shares, but they're worth less money. But you haven't lost money before you sell, because when you sell, you can't get that money back. You've solidated your losses. So don't be scared. You own the exact same thing as you did before the crash. Can't handle the loss? Don't even bother thinking about profits. If you can't stay through the tough times, you're going to end up buying high and selling low, and you can forget about profits, especially in something very volatile such as maybe the cryptocurrency market. So, you know, you don't need to apply for the stock market class if you can't handle bad times. You don't have to be all Warren Buffett and be super smart and make like really great decisions in the crash, because we're all human, we're all going to make mistakes, we're all going to panic a little bit, but you have to handle it. Just, you know, don't sell off your stocks or do anything stupid. It might be, and again it probably is, a healthy pullback. Unless the stock market crashes, we just call it a correction. If it goes down 10%, it's a correction. And it's almost always called for, which means it's just fair. You know, the stock market has gotten a little bit ahead of itself and it's gone away from the fundamentals, right? So the correlation between the economy and jobs report and quarterly earnings from companies have to have some sort of correlation with stocks. But if stocks go way up and there's not really anything supporting it, we might need a pullback. And it's just healthy, and it is a good thing, because if you have healthy corrections along the way, you can actually avoid going into a crash or a deep recession. You probably don't need the money you have invested. As I've told you, money you invest in the stock market should be money that you don't need for the foreseeable future. So why care if your stocks lose a little bit of value? You're going to make it back in 1 or 2 years. And besides, you don't even need the money. You probably have more money than you'll need. So You know, don't think about it as cash you had in your wallet or your pay, you know, your paycheck becoming smaller. It's just a little dip. Don't worry about it. And if you're panicking, if something is crashing really bad, like let's say you've been a Bitcoin investor and now it's down like 60-70%, step away from the market. Take a little bit of a cool down period. Don't sit and stare at graphs going up and down. It will always, in 100% of the cases, unless you're a robot, you're going to make bad decisions if you just stare at your losses and things going down. You don't know when the crash is over. You don't know when to buy. You don't know when to sell. So my advice would be, you should keep an eye on the stock market, because if it goes down and you have cash, you should buy more stocks as it goes down. You know, be greedy when others are fearful and fearful when others are greedy. But sitting every day, constantly updating yourself on the stock market, usually makes you sell at a loss. And being obsessed about the market and turning into a trader usually makes you buy high and sell low, because you're trading on emotions. Okay, so maybe you need to don't look, you know, play some video games, go work out, go for a hike, you know, go for a holiday, just take a rest and come back. Okay, so the stock market might go down. We've had a little bit of a correction now. I'm sure some people are panicking. The other day, one of my biggest investments was down 7% in one day. That was Alibaba. We've had some terrible earnings. Bitcoin is just disappearing in front of my eyes. But you have to stay calm and take the good with the bad and don't do anything stupid, okay? So good luck. Let's hope we don't have a crash. But the stock market has gone down a lot, but you see just now we've had a little bit of a correction of 3 or 4% in just 1 week. That's a little dip, and if we just keep having those, we can sort of keep slowly going up instead of going vertical and then vertically down. Okay, so good luck with your investing. See you in my next video.